Hi, I'm Adam DeSanctis. Welcome to MBA Asks the Expert, a series where we discuss a timely and important issue with the mortgage industry leader. Today, I'm here with MeridianLink's Mitchell Swanson, Associate Manager of Product Management for Part 1 of our new series with MeridianLink. Our discussion today is on AI and automation and how these tools are speeding up the mortgage origination process. Mitchell, thank you for joining us today.
Thank you, Adam. It's a pleasure.
Let's kick it off. Everybody these days is talking about artificial intelligence, AI. What role is AI and automation currently playing in the mortgage industry, and how can users ensure they are staying compliant at the federal and state level?
Yeah, that's a great question, Adam. And that latter part about staying compliant is very important. We all know that AI is quickly becoming table stakes here in the mortgage industry. The efficiencies that it has behind it are just endless. And for anyone that's been on the borrowing side of a mortgage application, you know how slow and arduous it can be. And for those of you who have been on the lending side of an application, you know how many manual processes there are to get a mortgage application across, right? I have to click here, click there, move this, do that. And that's really where we see AI, playing its role. It's going in and allowing your users to do their primary function, right? Allowing your lenders, your loan officers to sell, your processors to process, and your underwriters to underwrite so that they don't have to focus on all of those manual processes, okay? And, those AI pieces are not going to happen overnight, right? If I take an example from the auto industry, okay? With self-driving cars, it's been something that has been building up for decades, right? First, they came out with cruise control, then adaptive cruise control, then lane keep, and then, all the way up to fully autonomous driving. But it's the trust factor that's very important, right? Not everybody trusts self-driving cars, just like not everybody is going to trust AI with mortgages. And, here at MeridianLink, we see that and we understand how important it is to have trust and consistency with your AI automations, right? So as we are building tools to cut those processes down and allow your lenders to do their primary functions, right, we are keeping in mind the trust factor, right? But we also get that, a lot of lenders can't spend time taking decades to get AI fully into their systems, okay? And to kind of allow us to go faster and keep up with that pace of change, we're allowing other AI tech companies to integrate to our products so that our customers can choose from the best of the best, right? They have the tools at their disposal to be able to keep up with the pace of change. And that's very important. And one piece that I'll circle back to is the compliance side of this, right? And that's very important. As we've seen just this year, a judge in Massachusetts ruled against a tech company who was using AI to automatically decision loans. They found that the AI was actually doing some things against fair lending laws. And that's a big no-no. And here at MeridianLink, we do not want to fall into that same trap. So we're committed to making sure that we keep the human in the loop, right? We want the underwriter to be the one underwriting. We just want AI to be the helper, right? Remove those manual processes, get those out of the way so that they can do their primary function, and AI is just a tool to help get that done quicker, faster, and easier. So, just like the auto industry, we're not at fully self-driving cars everywhere on the road. Fully self-funding mortgages is way down in the future. It's a possible future, but we have a long ways ahead before we get to there.
I love that breakdown there and the analogy with the cars. Mitchell, closing loans faster is obviously a winning recipe for success. And as you mentioned, compliance is also very important. So what about MeridianLink's mortgage access? What measurable impacts have you seen on borrower conversion rates and time to close?
Yeah, so mortgage access is a point of sale that we've taken the angle of trying to be as simple as possible, right? We want consumers to get to the application and just be able to breeze through it quickly and easily, right? Not only that, but it's fully branded to the lender. They can change its colors, the fonts, they can add their logos, even the URL can be the same as the lender's URL. So that when an applicant goes to the lender's website and then navigates to our application, it's very seamless. And we're actually seeing an average of 77% of applications started complete, right? So that's an average 77% conversion rate. And we actually have one lender who has 93% conversion rate. So 93% of their apps are finishing. And so if you think about the funnel of, more apps in, more loans funded at the bottom, that's a great way to increase revenue for the business. And the next cool feature about Mortgage Access is we have a built-in rules engine. So as that loan gets submitted, that rules engine is reviewing the loan data to pre-request documents from that borrower. So for example, someone has Social Security income, right? Mortgage Access will request that Social Security awards letter up front, amongst other things, so that when the processor and the loan officer get to that loan in MeridianLink Mortgage, there is a list of documents already collected by the borrower. So that kind of helps shorten funding down using automation, okay, to get the documents up front. So once those documents are collected, we have a tight integration with MeridianLink Mortgage in order to collect those documents faster. And so when a processor is in a loan reviewing a document, let's say they're reviewing bank statements and it's missing one of the pages. Well, we have an accept reject functionality. So a processor can reject it in MeridianLink Mortgage, which will automatically trigger it in MA, in Mortgage Access, send an email to the borrower to try again, right? And this is where we kind of separate ourselves, where now the borrower can see typed in personalized message as to why this document was rejected, so that they can give you what you really, really need, okay? So that just really makes the user experience seamless. And not only that, but this is a place where AI can really help in, okay? So instead of that processor going in and manually reviewing, rejecting these documents, AI could do that instantly. So now we have instant feedback to try and bring that time to fund down. And that plays in part with some of the volume challenges that a lot of lenders have. So, as I think back when I was working for a bank back in 2013, where interest rates were low and volumes were high, our turn times were 60 to 90 days, right? We didn't have enough manpower to keep up with all of the apps that we had. And, this kind of underlines why it's so important to have AI, because it takes so many manual processes to do these loans, right? If we can physically see turn times increase with volumes, that just points out directly, we need more help, right? We need to have more automations, more things happen faster, quickly, easier. And that's AI's biggest proponent, right? AI can fit in, cut those things down, and allow lenders to scale with the volume. So they can provide a consistent level of service, whether it's high volumes or low volumes. And so I'm really, really excited about, the pace of change with AI and how MeridianLink is building these tools to allow lenders to succeed in the future.
Those are fantastic points. And as you can see, if mortgage rates do start to decrease a little bit more and you start to see the increase in demand, you can really see how AI would pick up and be very useful there for that. I've really enjoyed talking to you today, Mitchell. I appreciate you chatting with me on this important topic. Let's do it again soon. Thank you for joining us.
Thanks, Adam.